Good morning, friends. This is the chapter 1 for 11th standard, Understanding the Introduction of Accounting. This is a new subject for all of you who have completed their 10th standard and who would have taken commerce as their stream and have taken accounts as one of the subjects. So these videos are made to simplify the subject. So let us begin. To understand the basic terminology, or let us say to understand the meanings of accounting. In 1941, the American Institute of Certified Public Accountants, AICPA, had defined accounting as the art of recording, classifying, and summarizing in a significant manner and in terms of money, transactions, and events which are, in part at least, of financial character and interrupting the results thereof. Okay, this is the definition given by American Institute of Certified Public Accountants. But before understanding the full meaning, we should be able to understand what do you mean by business transactions. In our daily life, we tend to buy and sell some goods or services for exchange of money. And these buying and selling activities is known as business transactions. So, exchange of any goods or even services for money or money's worth is known as business transactions. Business transaction is an event involving an interchange of goods or services for the money between two or more parties. Here we should understand there should be two parties or more than two parties. So one is buying and one is selling the goods or services. The business transacted can be between two parties engaged in the business and conducting the transactions for their mutual benefit. So each one should benefit with each other. Some person is buying your goods or services and you will be paying the money, and so other person is benefited with the money. So each one has should have their mutual benefits. So this is known as business transactions. Now, coming to the first aspect of the definition is recording. Now, recording is a basic phase of accounting that is also known as bookkeeping. In this phase, all financial transactions are recorded in a systematic and chronological manner in the appropriate books or database. Now, when I explained to you about the business transactions, these have to be recorded in a systematic manner and chronological manner. We just cannot remember what we are buying or what we are selling, and it has to be recorded. So, these are to be recorded in a chronological order as per the date of the event. It has to be recorded, and it will be recorded in a T form where one side it is showing On the left side of the T form is a debit, and on the right side it is a credit. So the first basic books of accounts that has been recorded for all the business transactions is journal, and from journal it is transferred to ledger, which we can understand in the further chapters. So recording is one of the main aspects of business activity or business transaction. The next one is classifying. The classifying phase of accounting involves sorting and grouping similar items under the designated name, category, or account. This phase uses systematic analysis of recorded data in which all transactions are grouped in one place. For example, travel expenses might be a category that accountants use to clarify the expenses related to company's travel. All tea and snacks expenses can be classified as staff welfare. Stationery expenses are classified as office stationery expenses. Now, understanding the basic classification, we should be able to understand that involves of sorting and grouping, sorting and grouping of similar items. So, what do you mean by sorting? We have to keep aside all similar items. Let us, for example, you sort all the expenses, you sort all the incomes, you sort all the assets, and you sort all the liabilities. And you make a group. What do you mean by that? There are many type of expenses that involves in our everyday business activity. It can be simple stationery expenses, staff welfare expenses, traveling expenses, office maintenance expenses, salaries, and etc. So it has to be grouped into one particular item. And we have to name that item. What type of an expense is it? So what then if you can come to an income, it can be sales, it can be interest income, or it can be commission income. So again, it has to be grouped, categorized, and had to be named. So naming the category, it helps in recording the items correctly under correct head in the books of accounts. So classification is very important in the accounting. Now, after that, after classification, we should understand it has to be summarized. Summarizing phase of accounting involves summarizing the data after each accounting period, such as month, quarter, or year. The data must be presented in a manner which is easy to understand. Graphs and other visual elements are often used to complement the text data. So you have to summarize the data. Now, when I have so many business transactions, if I have, say, a lakh of business transaction, I may not be able to understand if it is everything is recorded in one place. So what we do is we have to classify as I told you previously. And then it has to be summarized for let us say we I want to know what is the expenses for during that particular month or particular quarter or half year or yearly. So let us say, for example, I want to know what is the total office expenses or office maintenance expenses or office staff welfare expenses or office salary expenses during the month. So it will be, I'll be collecting all the data, putting everything on a month wise, and I can get the whole data of the salaries or the office expenses or staff welfare of all the employees, how much will be the total for the year or for the month or for the quarter. So summarizing is basically is putting everything together according to the period wise. So this can also be done through graphs and other visual elements to so that the people can understand better. Few people may want to understand what is the total salaries for the whole year. They may not be ready to understand how much is there for monthly salaries. So for them, they need a total salaries which can be represented in the graphical manner. So that is summarizing. Now going further, interpretation. Interpretation phase of accounting process is concerned with analyzing financial data and is a critical tool for decision making. This is the final function, interprets the recorded data in a manner which allows end users to make meaningful judgments regarding the financial conditions of the business or personal account as well as profitability of business operation. This data is then used to prepare future plans and frame policies to execute financial plans. Now, let us understand in interpreting the phase of accounting process is concerned with analyzing the financial data. Now, interpreting means we can say what is a conclusion we are coming out of it. So, when I give all these books of accounts, somebody has to understand and interpret what exactly is happening in the company or the business. Okay, so we have to analyze the financial data. The group of people will sit together and analyze what is happening in the team or what is happening in the business. And this will help them to make decisions for future. Let us say, for example, how to avoid an unnecessary expenses and how to cut cost. What are the how to do a better marketing? What are the ways to promote their goods or services? All these decisions can be made with the good financial data and interpretation of data. So this data is used to prepare future plan and framework of policies and execute financial plan. So it will help for the future planning like budgeting, organizing, teamwork. Okay. So this financial data helps in the growth of the business. So all these meanings are put together in one form where it is defined as recording, classifying, summarizing in a significant manners, and in terms of money. Every transaction should be in the terms of money. Okay, and the transaction and events which are in the part at least of financial character. Every transaction should have a financial character and interrupting the results thereof. So, what I have been doing in these business transactions and coming to the conclusions. So, this is what the meaning of accounting and the basic terminology. Thank you. We will discuss it further in the objectives of accounting in the next video. Thank you.